All right, good morning, everyone. It is 8:26 in the morning of the 20th of April, 2022, and this is my pre-market strategy session. So today the video is titled Qs to the Gap, and the reason that I titled it that way is because back here from the close on the 8th of April to the open on the 11th, the Qs gapped down, and you can see, let me kind of make it big here. Actually, I need to move this up a bit. So the close on the 8th was at 349.15, and then the open on the 11th was at 344.81. And you can see, so after that gap down, the Qs spent a few days here trying to, close that gap right there. It's been hanging around this range right here, this consolidation range right here for a while. And so we're about to break out of this consolidation zone right here. I don't know if it's today. It could be a little bit, it might be today, it might be later, I don't know. But right now, what the pre-market setup on the Qs is looking like what it's trying to do here. And here's the 10-minute time frame. And this is the pre-market, the yellow shaded region right here is the pre-market session. So it opened up, it gapped up. Oh, let's see. No, actually, it didn't. There's yesterday's close. So actually, here in the pre-market, it's like only if it were to open right now, it would look like a gap. But having the pre-market session in here, I can see how it's going. Essentially, it closed above that mark there, 344. It closed above the bottom of the gap yesterday. And here we are this morning. And the goal here is going to be to at least touch the bottom of the gap, 349.15. And a close above 349.15 today will be bullish on its face. It will be bullish. If it goes up here and takes a peak above and then fails, that's not necessarily bearish either. What that is just sort of like a look above and a fail, and then it could spend some time hanging around inside of the gap for a little bit before it makes a push to stay above the gap. To kind of go back here and look at this consolidation area, there have been consolidation areas for a few days in the same general price zone. This is kind of a theme here roughly on the Qs lately, as they'll get down into a price and then they'll spend a few days there trying to figure out which way they want to go. And they're all kind of within this, say, 361 to 342, maybe 338 area. In any case, in these consolidation areas, it gets down to a price and it spends a few days, just moving a percent up and a percent down from kind of a center line, on those days. Let's see, in here, 1, 2, 3, 4, 5 days here, then 1, 2, 3, 4 days on this time, 1, 2, 3, 4, 5 days. And now here we are on this one, 1, 2, 3, 4, 5, 6 days. So today really is a day that could see some movement outside of the range, outside of this consolidation range right here. So and if I were to guess, which is basically all this is, all of trading and investing are just high probability guesses. I would guess that it's going up, and the reason that I have a fairly high degree of confidence that it's going to go up, and that's because there are a couple of things here. Let's see, there we go. All right, so the 10-year, right, has been really making a big push up. And had this big day back here on the 14th. Was that Saturday or Friday? I mean, yeah. Oh, Thursday. That's right. And Thursday was the last trading day of the week here. So this is bullish for rates, but this is a really rather significant move. I'd probably see it would to see a little bit of a pullback in rates today. It's going to be good in general for the rest of the markets. And the rising rates is typically considered bearish for the indices, but it might be in short term. The percentages, I have the percentages somewhere, but given just like say 2 or 3 weeks after rates start to stabilize after making their move, the equity markets catch up. So generally speaking, these rising rates, historically, rising rates are attributed, or rising rates get credit for being negative to the stock market, but it's only a short-term correlation, and typically speaking, within 3 months after rates make a move, which they are right now doing. I mean, here we are at the beginning of March, back here, and rates were at 1.7, and that is a really steep move right there. Well, in any case, the market, it's not necessarily bad for the indices, for tech or the S&P. And so I expect to see this thing resolve itself to the upside here after maybe today. Wednesday tends to be sort of they call it turnaround Tuesday, but Wednesday is usually the day where you see the new directions come into the market. So, okay, I'm bullish today, and I will be looking for bullish setups. This thing, the Qs had their chance to fail back here, and they didn't. And now it has its chance to, well, I say fail, actually. I shouldn't say fail, because it's not necessarily failing. Just because prices go down doesn't mean anything's failing. Let me say the bears had their chance here, and there just wasn't enough selling coming into the market for the bears to get the move. Now the bulls get their chance, and in terms of probability, the bulls win more often than the bears do. It's a good thing, because then prices would never go up, or prices would stay really close to zero all the time if the bears got their way. So it's looking like a bullish day to me. It could be short-lived. The day, this could turn around tomorrow, because we've got a VIX that's really close to the bottom of its risk range here. 20.05 is the bottom of the risk range on the VIX, which means that once the VIX hits this price level, you can kind of expect for it to turn around and start going back up again. And when volatility increases, you'll see prices on the indices decrease. So I'm expecting that we should see the VIX, even though the risk range is here at 20.05, I think that we're going to break on through the bottom of the VIX there and go lower, and see about putting in some higher prices on the general indices here pretty soon. And it might only be this day. It might only be today that it does this. We might come in Thursday and there's earnings or something that's caused the rest of the market to take a dump and the VIX to rise. But for right now, I'm looking for bullish setups, and that's just the way it is. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.